Have the power couple of DiCarlos win the house tonight. Jamie and my boy AJ. They're going to talk LLCs, do's and don'ts. You've also got title, very smart title, and semi-smart lender. More looks than brawn than brains, but he's a good guy. Handsome though. Nah, honestly, two powerhouse people in the business. So we're just gonna, no slides, just talk, ask questions. You want questions at the end, or you want them to interrupt?
I'll save it for the end.
Okay, so save it for the end, and then we'll just probably talk for 30, 40 minutes after that. And then you guys can stay as long as you want, as long as you move the chair back.
Mike,
You know.
anybody who wants questions can get Mike this way.
Little fuzzy cats if you were.
Okay?
Yeah, we'll just hold it up. Okay.
And if
I
all
speak
works
loud.
well, I'll end up having this online.
So shut up. So I'm going to read a disclaimer first. So full disclaimer, we are not CPAs, tax professionals, real estate attorneys, or wealth advisors. Everything we will talk about is strictly from our professional and personal experiences. Different title underwriters and different lenders do and do not allow for certain types of entity vesting and entity lending. Between Jamie's 23 years of title experience and creation of hundreds of LLCs and drafting countless of operating agreements, she's also a registered agent for I don't even know how many LLCs. We get mail for different LLCs in our office every day, and they come and ask me, and I'm like, just slide under Jamie's door because I know it's for one of the ones that she's registered agent for. And then also with her being a licensed title agent, she has access to 8 title underwriters. So if like First American or First National? First American, if their underwriter sucks, she can like move over to Stewart Title or something like that. She's done it. And then also, I have years of experiences both in the broker side and the retail side. I worked for the number 2 lender in the nation. Now I'm working for the number 1 lender in the nation. Basically, with where we're at in our careers and who we work with, we kind of have, I'll probably say the loosest rules and requirements and overlays when it comes to lending and title. That's our disclaimer. Now, full transparency. I think Caleb scheduled us to do this late last year when he was trying to plan out everything for this year. So we had 11 months to prepare for this. We didn't even start talking about this till yesterday morning. So it's a good thing we know what the fuck we're talking about. So, you want to take it away, Dave?
Yeah. Okay. Thanks. All right. So creating an LLC in the state of Florida is super elementary. Can everybody hear me?
Yeah.
Okay. I don't want that. Okay. So basically, in the state of Florida, there's a website called sunbiz.org. Everybody's familiar, I'm sure. In that website, that's where whoever is creating the LLC will create the LLC. It's very streamlined, but there's some documentation that you'll need to provide your registered agent before generating an LLC, because I have to get it approved. The registered agent will need to get it approved from the state. Once it's approved with the state, you apply for the EIN. That takes actually it's the same day most of the time. And then you open up a business account. And then from there,
Your operating agreement?
yeah, I do generate the operating agreement, and that really spells out the ownership. And that's what my underwriter is gonna look for. Because that's how it has to be vested.
So, docs, that you're underwriting.
Oh, just really the operating agreement, and I can pull the certificate of good standing off Sunbiz. You can look up any LLC that's registered in the state of Florida on Sunbiz. I think the most annoying part is coming up with a name that someone else doesn't already have. That's what really takes the longest.
Who here has a property that they're in an LLC using that property address? Anybody? Raise your hands, don't be embarrassed.
I'll say that again.
Who has an LLC for a property with the property address as the LLC name? Who does that? Don't do that.
Don't do that. No.
You know how many times I've seen people create LLCs for properties and they lose the deal? And now they have an LLC called like 123 Main Street LLC that they're doing nothing with because they lost out on 123 Main Street, when they were trying to purchase it. So, yeah, I mean, she has a pretty standard naming convention that we also use. We have like a name, and then for everyone it's blah, 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 1, blah, 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 2, blah, blah. And it makes life easier. And then from a lending perspective, what we need to invest in an LLC, because everything has to go through an LLC, kind of like, we call it like our trust POA LLC department. They review everything for legality purposes, so we're gonna need the articles of organization as well, EIN, operating agreement, certificate of good standing. Even if it's recently created, we still need a certificate of good standing. As silly as that sounds, we still need that. Let me see this real quick. So there's one other thing that we need depending. So, so this is not every lender, but I'll tell you what we need is, it's called a unanimous resolution. Has anybody heard of unanimous resolution? So basically, we will generate that and then have you fill it out, because obviously you wouldn't have a unanimous resolution already with the lender's name on it and all these things. So it'll include lender's name, property address, the correct loan amount, and it has to be executed by all members of the entity, even if they're not on the loan. So if you have a 4-person LLC, I don't need all 4 people on the loan. So if like 2 of the 4's credit is total shit and you don't want to use them because it's gonna screw your rates, then only 2 need to go on the loan. But this still needs to be executed by all members of the LLC.
Been there, done that.
Yes. And then, so another big thing, people like to have holding companies, right? So LLCs that hold an LLC. So if you're vesting in an LLC and that holding company, the owner of that nested LLC is another LLC, we need those entity docs as well to make sure that the LLC is able to do what the holding company says it can do. In the most easiest sense of the name. And then I would say the most common state I see for holding companies is Wyoming. So if you have a holding company, most people do in Wyoming. But also Delaware is another one that I would say number 1, 2 are Delaware for holding companies. Although you had your hand up, Anthony. And then, now we'll just kind of roll into like the do's and don'ts of what you do and do not want to do.
Did you say that was a mistake?
I'm sorry.
What did you say was a mistake for Wyoming, Delaware? I missed that part.
No, I didn't say it was a mistake.
Okay.
No. I maybe lose my train of thought. What did I say that was a mistake? Bruce, can you rewind this so I can?
The mistake was the 123 Main Street thing.
Oh yeah.
Like using your
Because
Holding company.
unless from a realtor's perspective, I know realtors don't like doing additional paperwork. So God forbid they give me a contract that's in somebody's name and their clients want to then put in an LLC. So I've had people in the past who form an LLC specific for a property they want to put an offer in on, and then they lose out on the bidding on that property. Now they're stuck with an LLC named after a property they don't even own. It's happened more than you think, actually.
Okay.
I'm sure you have.
Well, I bought a house, put the address in it, and then I sold that house, but I still had another house in that address, and I was like, well, this is stupid. Signable contract.
So yeah, I'm talking about where it should go. So state, yeah. So generally, you want to form an LLC in the state where the property is located. If you don't, it would have to be registered as a foreign entity in that state. So it's just so much easier. Like, I mean, Kevin, you're about to build in Colorado. I'm sure you're not forming a Florida LLC to build in Colorado. That would just be silly. So yeah, generally you want to do that.
Florida makes it super easy though.
Yeah.
Super easy.
Colorado's fairly easy when I formed the LLC.
You want to talk about the operating agreements?
I mean, really in the operating agreement, it spells out the ownership of each member. And then it also has to have the wording, buy or sell property.
Yeah, like you can't use like your LLC for your plumbing business to buy real estate. Like if you're vesting a property in an LLC, it has to be written into your operating agreement that is for the purpose of buying, selling, renting, managing real estate. So make sure, I've seen that where people already are self-employed and they have like some rando business and they want to put a rental property in that business and that gets shot down. So that's a big no-no.
Well, that's a huge risk too, because then if you get sued for the rental
Then you're
property-
mixing that, I'll dive into that shit, believe me, because I see it all the time.
If you put a property in an LLC that's really not, it's like a different business, how hard is it to unravel it and put it into another LLC?
You just have to create a new name and then quit claim it.
There may be tax consequences
Oh yeah,
too.
there absolutely is. You're gonna pay transfer taxes on the,
Yeah.
absolutely.
Yeah, so you wanna make sure you set it up right the first time.
Yeah, so like if you put in one L, it's no different than like, if you owned something outright and you wanted to, put it in Caleb's name, you would just do a quick claim deed for $10 and pay the transfer taxes and whatever, it'd be the same thing. I mean, now if there's a lien against it, that could trigger a due on sale clause, and then we're going on a whole different rabbit hole with
The
that.
title would tell that.
Yeah. But yeah, I mean, Jamie drafts up operating agreements all the time.
Creating an LLC in the state of Florida is elementary. Maintaining it is a totally different story. 'Cause
Yeah.
I've got, if I start an LLC for 5 companies in January, I gotta stay on top of that, just file their annual report. February, I may have done 20. I stay on top of that, make sure I file their annual reports. It's a lot of admin work that people don't wanna do, really.
Or we'll get clients who, I'll be working with them and they want to put a property in an LLC, especially new investors, and I think it's maybe something they read on TikTok or watch a YouTube video or some shit like that, right? So they'd be like, well, where do we start? And I'm like, just call my wife, she'll help you out. And this has happened where this client called my wife, he explained the process to her, so he went to go create it and put her down as the registered agent without her knowing. So now she's the registered agent on this LLC, all because she tried to do a dude a solid and tell him what to do. So guess whose annual report's not getting filed?
You need to be licensed to be able to be a registered agent. You don't have to be licensed in the state of Florida to be a title agent.
So something that comes up a lot, and we kind of touched on it a little bit, is entity layering. A lot of people, they want to put all their LLCs under holding companies, whatever. I'll let Justin Gates next month talk about how he feels about all that, because he's much smarter than, he's the speaker next month, right? Still? Okay, good. Yeah. When it comes, he has his own opinions on LLCs and all these things, and he is way, way, way smarter than I am on all that, so he'll probably provide much more insight than I will. But when it does come to entity layering and lending, believe it or not, a lot of lenders don't allow it. And they just, for some reason, they think there's risk. And I mean, most people who do entity layer do it because they're not like somebody who just learned how to do it on TikTok or on, or on some bigger pockets forums, or even though I do run to those people. We do it. I've had 2 broker loans out before when I was other lenders that would allow it. But yeah, it's the same shit. Like, so if you form an LLC and it's, a nested entity under that holding company, again, we would need all those docs, but what I don't want people to get into is crossing streams. What I mean by that is like financial streams. So they would, they'll show assets for the transaction, but it's the name of the holding company, but the holding company is not the one that's buying this property, so it has to be able to spell it out in an operating agreement, and then all this legal shit has to go on, and then the next thing you know, I'm getting a phone call from the client that they talked to some online attorney in a chat forum, and this is what they told them to do. This is all real. I've really had this happen. But yeah, so whenever you want to entity layer, now I just lost my train of thought. I'll say, if you're creating nested entities, the parent entity's resolution must authorize the holding companies to basically take title on the loan. So it has to be spelled out in their operating agreement. Here's a good one. How many people have investment properties that are reporting on their personal credit? Raise your hands. It's all good. Don't feel stupid. Or any of your investment properties in an LLC that are reporting on your personal credit? Anybody? Yours is?
I think I have.
Well, that's because you didn't do it the right way. So this is something, and I've actually just got a loan today, and same thing. And people don't understand, like, if it's reporting on your LLC, but you did something to make yourself the personal guarantor. So the ways around not being a personal guarantor is not using personal assets, one. Like, so we obviously will pull credit And especially when we do like DSCR loans and things like that, or hard money, or, we're gonna pull credit because, your rate is gonna be based off of your FICO score. But if you have your business entity with a business bank account and you're using those business funds, then you're no longer a personal guarantor. However, there are some lenders out there and there are some loan products out there that's not true. Like, I had an example. So I did a loan and it was on a investment property in PCB. And because it was a 6-person entity, I had to broker it out. This was a couple years ago. And this lender, their overlay, so basically their made up rule, they said that if the loan amount is over $1 million and personal assets are being used, and the spouses, even though they're not on the loan or on those bank accounts, they had to sign as personal guarantors.
That was fun.
So could you imagine getting 6 signatures of the borrowers and 6 spouses' signatures for this? Yeah, in different states.
Title nightmare.
And they all have this, yes, yeah. So that should happen, so be leery of that. So yeah, the easiest, cleanest way is just like, I'll just use this as an example. Create the LLC, create the EIN. I have the subject matter expert write up the operating agreement. We go open up a business bank account. In the name of that, we move funds into that business bank account. The funds that we move into that business bank account are per what we say the capital contributions are per our operating agreement. That's how you keep it clean, that's how you keep it easy. But I will say, some lenders will still make you be the personal guarantor. If that's the case and you don't want to be, then just go find another lender. It's really that easy. You don't have to, unless they're just really good rates and you just are okay with it being reporting your credit. And
so
then
when it comes down to that as a lender, let's say I've got a property that it costs me $1,500 a month and I make $2,000 on it. You can use a certain amount of that on my DTI, right? If it's personally guaranteed. So if I'm trying to buy another property,
why
right?
would you ever buy an investment property and utilize income?
That's what I was thinking.
Well, I'm just asking you to happen.
So yes, it happens. I'm a big proponent of DSCR loans. Like, they're easy to do, so easy to do. And I don't know, I just like them better other than like using personal assets and income to buy investment properties. That's just me. You give the underwriters so much shit to look at, and they will, it makes the process, Mike, how quick did our loan get done?
Oh yeah,
But if that, but it was because it was a DSCR loan. Like, I didn't need, their income. I didn't need W-2s. I didn't need bank statements. bank statements, taxes, any of that shit. I just needed to make sure they had enough funds to close, enough reserves, and their credit qualified for it. And that's it. And then we did the rent schedule appraisal. It came back. Okay, we got better than a 1-to-1 ratio. You're good to go.
Have you seen that tighten up at all right now with kind of the current market and the lending appetite with like Fed rates and stuff? So you've seen DSCRs kind of tighten requirements and stuff like that at all?
No, they've gotten looser.
Have they?
Yeah. So not only that, everybody's going to AirDNA, dude. If the occupancy percentage is high enough, everybody's using AirDNA in lieu of a 1007. Just because, I've seen 1007s come back. I'll reference the deal I did with Mike again. There was 3 appraisals on that property in a matter of 2 months? 3 different appraised values, 3 different rent schedules, totally different. So there's too much human error when it comes to evaluating a short-term rental. So a lot of people are going to, or a lot of lenders, I say AirDNA, so Option is a company that's teamed up with AirDNA, and they're supposed to be accurate within 98.8% or something like that. And as long as, our overlay is as long as the occupancy percentage is greater than 60%, we can use AirDNA data with 100% occupancy as to get the ratio. So if it says, let's just say, a property you're buying has AirDNA, even though it shows the 51% occupancy percentage, it's saying it's gonna make 50,000 with only 51%. So what we'll take is, we'll take 50,000, divide that by 12, and as long as that is greater than the PITI, then we have a better than 1-to-1 ratio, and then, we'll approve it on DSCR. But today I locked a DSCR loan on an investor with one of your teammates' clients, and they were at 6.99. So we're getting back into the 6s. I locked one 2 days ago on an investment property in PCB, and they're at 6.875. So yeah, DSCR loans are actually getting more appetizing, I think, especially the non-QM space. And with us, we portfolio everything non-QM. So, everything's underwritten and kept and serviced in-house. So, we don't have...
You don't sell any of the non-QM stuff though? Can you explain non-QM?
So, I'm sitting here. So, you have two types of mortgages. You have a non-qualifying or a qualifying mortgage and a non-qualifying mortgage. A qualifying mortgage is basically anything that meets Fannie, Freddie, pretty much Fannie or Freddie guidelines. The reason why any investment property vested in an LLC has to go non-QM is because Fannie and Freddie do not allow for properties to be vested in an entity. So you could still go full doc non-QM. I do it all the time. But yeah, if you want to put it in the name of an LLC, it has to go non-QM just because Fannie Mae and Freddie Mac do not allow properties to be put in an entity name. I feel like you have a question. You're whispering.
Can you explain that again a different way?
So Fannie Mae and Freddie Mac, they're government-sponsored entities. They're basically what drives conventional loans, right? They're agency loans. They don't allow, according to their guidelines, for properties to be vested in an LLC or an entity name. So because of that, anything that is vested in an entity needs to be a non-QM loan, a non-qualifying mortgage.
Technically, but you said a full doc, non-QA.
Yeah, so full doc, we would still use income assets, W-2s, all that, tax returns, but it would still be a non-QM loan.
And then held
There you go.
in-house with you guys.
Say again?
And then held in-house with you guys.
I mean, we can do bank statement loans, like a lot of people, self-employed, they write off everything, because why wouldn't they? But then, like line 31 on their Schedule C shows like they made $1,000 last year. Well, nobody's qualifying off $1,000 a year, so we can go off business bank statements. And depending on what type of, if they produce a good or a service, then they would kind of get like an expense factor anywhere from 20 to 50%. And it's crazy. Like I did a bank statement loan for a mechanic in Fort Walton, and on paper it showed he made like $2,000 a month. But once we did the bank statement loan, they did the calculations, even like did the expense factors for his employees and shit like that, it showed him making like $21,000 a month. Just because, wages, things like that, those are all write-offs. So we went off on a totally different tangent than we should be on right now. We're talking about LLCs, now we're talking
So I'm
about...
gonna back you up then. Question, when you went to capital contribution to fund the LLC, why that versus a loan? If a loan's better, can Jamie draft the agreements for the loan to the LLC?
Wait, what now?
Capital contributions to fund the LLC, when you were talking about the multi-member, they had to get the signatures from all the members, right? You mentioned doing capital contribution. So I'm asking capital contribution versus doing a loan.
We're talking about the members loaning the LLC money?
Right.
I mean, same. I mean, they're contributing money to the business.
Right. So you're saying write it up with like, you're gonna pay yourself 10% on that money?
Yes,
So I'll be honest, you may have seen that. I've never seen anybody do that.
I have,
Well, she's smarter than me.
So then can you help generate those documents?
I can.
Okay, that's all. Thank you.
Yeah. No, when it comes to operating agreements, she's the subject matter expert. I just know that's what we need as one of the requirements. But
That's why I asked if she
Yes.
could do it. I figured it was her domain.
Oh, yeah, it is, definitely.
Jamie, will you talk about the importance of operating agreements, especially with partnerships, and like
Well,
how they
yes.
can burn you? if you
Oh,
don't have
yes,
the
they
right
can
way?
burn you. If it's not spelled out completely in the operating agreement on the percentage of ownership, it's nothing. I mean, it's very, very important that it's spelled out, because that's how I have to convey on the deed.
Hey, so I should know this. This is her area of expertise. What is it when somebody, what's it called when somebody can sign on behalf of all members? It's written into the operating agreement. We had it with James and all
Yeah.
them.
Power of attorney?
Yeah, the signing authority.
Durable power.
The what?
It's a signing authority.
Yeah, but it's
Yes.
called something else though. But a lot of lenders won't recognize that. Even if you have it written through operating agreement, a lot of lenders won't recognize it. Like we had it where we had, what's it called?
I don't know, but our operating agreements, they say either or of us can sign without the other president.
Yep,
And
that's
they
right.
also-
So yeah, some underwriters will actually have that, and you'll have it in your operating agreement, but some underwriters will be like, okay, but we still want a POA for it. And I'm like, but it's in the operating agreement.
But then after getting kicked back, I hired a lawyer to write the operating agreement, and it's still problems with it. Just had problems with it last year.
It's honestly whenever it's lender overlay. No, we had the same thing. We had where it said in their corporate resolution, everything like that the managing member who was the majority owner could sign on behalf of all the other members, and they were like, okay, but we still want POAs for everybody.
Right.
And I'm like, what? Like everybody signed in the operating agreement that they could do this, but you still want them to sign POAs saying they could do. So it's really it's always the lenders fucking shit up. Is really what it is. Damn lenders.
Hey, I just do the easy stuff, and then he takes care of all the hard stuff, and then it comes back to me.
And I argued with him, and then the lady finally called me, she's like, what's the problem? She's like, is there a problem? I was like, there's not a problem, she's out of town, you know? And then finally she had to come back to town and sign.
They didn't let you do a POA or
I was
anything?
gonna say, what?
Really? Wow. This was a lender that was saying that? That lender sucks. I don't know what it is, but that lender sucks. Talk about so Jamie, we have a great story about owners' policies and the importance of them. And a recent horror story. Rob, cover your ears.
Years. No names.
No names, but you're gonna know who we're talking about.
So AJ and I had some investor, they bought some property out in Panama City Beach, right? Lots 12 and 40. Well, she reached out to me and asked me if I would quit claim it out of the LLC into their individual names. So I do my due diligence and I go back and I find the last vested deed. Well, the builder messed up on the original deed, tried to corrected it incorrectly, tried to correct that.
Look at me, Rob. You know what I'm talking about.
Corrected it incorrectly. The last vested deed is in someone else's LLC, and as the title agent, we insure the legal description. We do not insure the property address. So the last vested deed had lots 1 through 40 in someone else's LLC, who happened to be the listing agent and the builder.
So
yeah.
the title company screwed up 3 times.
Yeah.
And so all 40 of these owners, well, I guess a little less, because some are multiple, their property is technically deeded to someone else.
It was
That happened to me. We bought a cabin in Alabama. It was a 2-acre lot, and I split the parcel into 4 parcels to sell 3 and then keep the cabin. And when we sold those parcels, we went to sell the cabin later, and somebody had deeded the cabin to the person, like the title company deeded the cabin to the person that bought the lot. So they got a lot for $75,000 and the cabin on
Nice.
But did you have an owner's policy in place?
Yeah, but they were super cool. They
Yeah.
signed
So
it. They're like, yeah, we can buy that.
super easy. But when there's not, here's the kicker with the other situation. The builder, what's that? The builder paid title. They never pay title. Because I have been in this area for a very long time. I've got relationships with multiple underwriters. So I knew who did the title work. So I called my contact and we were on the phone for like 30 minutes trying to figure this out. There was never an owner's policy issued. Had she had a policy, it wouldn't have to go to litigation because the underwriter would just slide in and take care of it. But it's going to litigation. It's a nightmare.
So that means
For everybody involved.
everybody in this subdivision of new build can't sell, can't refi, can't do anything. 40 properties.
And the title company is closed.
And the title company
and
went
the
out.
2 people in the LLC have moved to North Carolina.
And the builder and his wife took off.
And the lady's renting the house out and she can't get insurance on it. because
I know.
It's crazy, and then she's trying to use the equity in the house to buy other houses.
That we're
She
hopefully
can't
closing
use it.
on the end of the year, but we can't get the equity out. And yeah, she's under contract on a $1.2 million house in Inlet Beach, and she needs to take out $200K of equity out, but she can't because this
it's
going
not
on.
conveyed in her
It's
name.
nuts.
It's crazy. It's like, that's why, a lot of people don't realize how important or crucial an owner's policy is in a real estate transaction because of this situation. Had there been an owner's policy issued to each owner, they could have just, submitted a claim with the underwriter and then done.
You know what's really funny is I was talking to one of my buyers today, is buying a new build, and I was like, well, you're getting an owner's policy. It's not really a lot of risk on a new build. And then now you're telling me this.
Oh, we got a better story.
Oh,
We
yes.
did it took 6 months to fix. So I was working with this buyer, and she was, same thing, buyer, how do I say it? My buyer was selling her outgoing primary. Jamie was title on the buy side with me. The seller of her outgoing primary picked title. Well, since she had bought this property, they had put up fences, put up barns, did all this shit. So a new survey was required, right? They went to go do the survey. The original lot lines and the property that her house was built on, the surveyor fucked up. And what she thought was her property was actually part of a state forest and her neighbor's land.
Oh my God.
So the Department of Forest, the State Department of Forestry had to get involved. Dude, it was an insane nightmare. And they tried to, so there was still a road in and out to her house, but legally she couldn't take that road. So she had to go, there was an easement where she had to technically, on paper, cut through her neighbor's yard, but the neighbor wouldn't agree to it. She would never have to really drive through his yard. They just had to put on paper that there was gonna be an easement, that's how she would get in and out of her property. And the neighbor said, no, I'm not signing this unless you give me $200,000.
Oh, it gets better. It gets better.
Oh yeah. Oh no, that ended up being a whole mortgage fraud situation where she married her daughter's baby daddy to get qualified for the loan. That's a whole different
And
story.
I've been working with
Yeah.
this lady for like 6 months, and he tells me 2 days before closing. I'm like, you cannot come to the closing table because I have to look at this lady in the face.
So I don't know if you mentioned it, but you said owner's policy, right? The takeaway is get an owner's policy.
Yes.
But in the situation that you outlined where the title company is no longer and all this other stuff, then I'm guessing you just call the insurance company that issued the owner's policy?
There's not an owner's policy.
No, if there were.
If there were, yes. Yes, it would reach directly out to First American, Sewer Title, any of those, whoever's holding your owner's policy.
Gotcha.
But again, like, I have 8 different underwriters I can use. So I know, like, I'm getting a DSCR loan, I know to send it to this underwriter because they're a little bit more lenient versus VA, so. Owner's policy, yes, is a must.
So really last thing we're gonna hit on for investing in LLC is insurance. So that always comes up. So some service providers will allow to be the named entity as the primary insured and the individuals as the additional insured so they can carry liability coverage. Some actually alternated, they won't allow the entity to be the named insured, it'll have to be the people in the entity as the named insured and the entity as the additional insured. Citizens, I know, is one that definitely does that, and they don't even allow for short-term rental insurance anyway, but for long-term rents, Citizens will not allow an entity to be a named insured, it has to be the people in the entity. One recently that I got that does allow it is Florida Peninsula. So Florida Peninsula will allow the entity to be the named insured and the members to be the additional insured, so they can carry liability coverage. Some do allow for the entity to be the named insured, but still won't allow for personal liability coverage. So then you have to go out and get an umbrella policy, which I know Justin pushes umbrella policies hard anyway. And we actually had an insurance, we were talking to an insurance agent yesterday on our networking group, and like you can get a $5 million personal liability umbrella policy for like, I think she said $400 and something a month or something like that. So that's always an option. So that's always something to consider, because insurance is a quarter of that PI/TI. So if you can get a cheaper policy to get a good ratio on a DSCR, but it may not have personal liability, then go out and get an umbrella policy, because we're not going to count that towards the PIT. It's a separate policy. That's another thing to look at, is definitely insurance, because last thing you want is having an investment property and you don't have personal liability coverage on it, and then some shit happens, and then now you're SOL, especially when you made yourself the personal guarantor on it. that's anything you have, babe?
From a title standpoint, I have after I generate the LLC and we get everything rolling with the EIN and the bank and all that, I kinda step back and do my due diligence on the title side while he's working the numbers.
Fire away.
Yeah.
Nothing?
So you mentioned certificate of good standing. How does somebody that newly formed an LLC get that?
You registered agent.
Or you can get it yourself. You can literally go to Sunbiz and search certificate of good and you can pull it. There's plenty of times where, like, honestly, like, especially for people who don't know what the hell they're doing, it costs $5. I will literally, like, pull out my credit card and pay the $5 and pull it for them, or, you know, and then we just literally just add it on as a closing cost, you know, and I'll just expense it with my company. Here's a $5 expense. But yeah, it's that simple. It'll be there.
I might have it. I got a registered agent, so I'm just never heard of it. But
It's gonna cost $5 to get it with Sunbiz. So, I mean, you could literally go on Sunbiz and get it yourself. It just costs $5.
Okay. And then, we talked a lot about personal credit and obviously capital contributions, but what about PAYDEX? And do you have any recommendations for increasing your PAYDEX score?
Oh, dude, I don't work business credit scores at all. We go strictly off FICO and now soon the Vantage score, but we don't go off business credit scores at all for loan qualifications. Now, maybe if you were buying like commercial or something like that, or like actually buying a business, but yeah, we go strictly off FICO.
Okay. So even if you're not personally guaranteeing the loan, you're still gonna go off your FICO?
Yep.
Even on a DSCR?
Yeah, so we use the FICO score solely basically for rates. Like if you have like a 560 FICO score, obviously you've not demonstrated any sort of personal responsibility, so no one's gonna lend to you. But if you have like an 800 FICO score, yeah, you're gonna get better rates. That's pretty much loan to value, you know, rate, shit like that. That's really what we use the FICO score for. We don't even, I mean, obviously on a DSCR loan, nothing on there, unless you have mortgage lates, even remotely will affect you at all. You could have all the collections or whatever, late payments, whatever in the world, but if your score's high enough, you know, you'd be fine. But yeah, I mean, even with like, I've done loans where they still do have mortgage lates. Like we had a client where he went back to Vietnam for 2 months and didn't have his mortgage on auto pay and had a 60-day late and a 30-day late, and we still were able to do it. He took a rate hit, he did, but you know, but as far as any other liabilities on your credit, it doesn't really affect you much.
Thanks.
Ladies first.
Sorry. I'm sort of a little late to the party. So what's the advantages of having an LLC if you have an investment property? I guess that might be a dumb question, but what are the benefits of having an LLC?
It's a great question for Justin Gates when he's here next
I was
month.
gonna say.
I mean, I know the benefit. I would feel better letting an actual CPA and MBA and really say it. I mean, I've even heard him say that you don't need to have an LLC. I think you probably heard him say that. He's like, yeah, you don't need an LLC. Just get a big umbrella policy. You know,
liability protection.
it is. It's
So,
really
if
liability.
you have liability protection, you know, if you have an umbrella policy, it's gonna cover that. It's, but it's just another layer.
Well, the only assets that are at risk are what's in the LLC.
Correct.
And so you only have, and then you'll see a lot of gurus online say put out your property in a separate LLC, and then your CPA will merge.
Depends upon what
Yes.
attorney you're going up
Depends
against.
on how
Schedule
good it
E
is.
will be
Yeah.
like 5-6 pages long.
Oh, it's so bad. I did that for a while, and Justin and I like reconsolidated and was like, well, put your long terms in a passive, put your short terms on an active, and then do it that way. If they're leveraged, like, what are they going to sue you to take the debt anyways? Like, cool, paid off. Good luck.
I know one of the biggest things is anonymity, so that nobody knows that you actually own it. That's a big part of the equation. Depends on your needs, whether you need that or not.
You have to layer it, 'cause you can't.
Yeah.
There's no anonymity in
Florida, yeah. And then
Yeah, that's for the holding company.
Yeah, so if you have a holding company in Wyoming that owns the LLC that your property is purchased in, Wyoming is a non-disclosure state. And so if they try to sue that LLC, they can't actually find the owner.
Nested within a Nevada one.
So like, that's why.
Like hold approved when it comes to LLCs.
Wyoming?
And asset protection where you tell me it was like hold approved, you go to Wyoming.
Yep.
Most companies
And it's
in the
cheap in
US,
Wyoming.
big companies,
It is.
will be a Wyoming LLC operating in, say, the state of Florida, state of Texas. As
So every foreign national I've done a loan for has a Wyoming LLC.
Yeah.
Every single one.
It's cheap.
Wyoming will protect you. Like, you know, every state has something they make money off of. Wyoming makes money off LLCs. That's how they make money.
Yeah.
So if you ever get sued, they're gonna protect you. They're not gonna let them that.
Yeah, our holding company is in Wyoming. Yeah, and then it owns the LLC that owns the apartments, and it owns the LLC that owns our short-term rentals. And so he couldn't find me. I probably produced a corporate bill somewhere else maybe, but there's lots of ways to get back to you, right? If you move money from one business to the other, and they can prove that. They can say, you know, personal funds, et cetera, then they can find you. But if you're smart about it and do it the right way, they won't be able to find you. Probably not so that's smart.
Yeah, that's why we're having this conversation, because a lot of people, they do it the wrong way.
But, this new LLC is formed, and you get your EIN number, you go down to the bank, what do you wanna see in that bank, account? What do you put in there, like $1,000? Do you put your full deposit on the property? When you go fill out your DSCR, is that money you wanna see from the, that bank account, or does it come from your own
So
personal
you're gonna
account?
want enough funds to do the transaction, but also take into account reserves. So really, you're gonna wanna speak to the lender, because, like, for instance, our overlay, any loan amount under $1 million needs 4 months of reserves as an investment property. And then 2 months of any other property that is reporting on your personal credit. Well, if you have all these ones vested correctly and done correctly, the other ones shouldn't be reporting on your credit. So really, you should only need like 4. And then when you get north of $1 million, it's like 6 months of reserves of the PITI and A if there's any assessments. So you kind of want to keep that, at least that
So you
amount.
wanna see that all out of the LLC bank account?
If you want to, yeah, I mean, you can show a personal bank account, but then you just made yourself a personal guarantor.
Okay, you're putting money over there, and hope that you can get this property, but you're pulling it out of your personal account.
I mean, at some point, it's got to come from a personal account to get into that account, you know? But that's where the operating agreement comes into place, and that's what I see most people do, is they have it written to the operating agreement, what the contribution to that LLC.
That's
from,
important.
Yeah, oh,
It's very important.
so I wasn't going to talk about this, and it just happened, and I kind of put it on my little cheat sheet. Don't put your children in your operating agreement and as members of your LLC. I had it happen for somebody to put their 7-year-old and 5-year-old as members, and even showed that these 7-year-old and 5-year-old contributed capital towards the, I can't make this up. I can't make it up. So, where's that paper? Because I wrote this down, or typed it out, and I can remember it on my cheat sheet. But
They're hiding
so the
money.
state of Florida, there's actually, it's not illegal. You can actually do it in the state of Florida. How the hell did this paper just disappear?
Check your back pockets.
So you're saying you can do it in the state of Florida?
You can, but yeah, you can.
Yeah.
But like, your 7-year-old is not contributing $100,000 towards Caleb Drake LLC, you know? So this happened, so I looked this up. So adding kids under 18 to LLCs varies by state and lender. There is no residence requirement nor age requirement for members of an LLC in the state of Florida. However, minors cannot enter into contracts, which can be problematic for business operations. So
Yes.
So yeah, basically what you can do is you can have it written into your operating agreement that upon a certain age, they now are a member manager of the LLC, and this is their ownership percentage and this and that. But yeah, I had somebody who, he thought that that was a good way, if something happened to him, that his kids would get the property, and I'm like, you realize there's like several other ways you can do this than that.
There's a will.
Yeah, like,
There's a trust.
he's Army, and you know.
When you get high enough,
But
it's
yeah,
a trust.
I saw that, and I wanted to make sure I brought that up, because that was the first. I'd never seen that happen before. Go ahead.
So when it comes to non-QM, are we still adhering to like residential, commercial rules when it comes to property? Like,
So in non-QM loans, the lender makes the rules.
okay. So follow-up question then, and Mike and I have some familiarity with this. So properties, when it comes to affordable housing, right? Like that's been a big issue in our region, across the state and the country for that matter. Is there any consideration from a lender given to properties that would be rented affordably, like under 120% AMI?
No, not really.
Right, so the rate that you would offer someone that's building luxury condos is the same as someone who's doing something for workforce housing.
There's some programs through the city for redevelopment and low areas.
Which city?
City municipal. But
Never
I
heard.
don't know about a loan.
So you've heard of a ship loan?
Sure.
So ship loans, like they have a priority, and like the first priority right now, at least in Okaloosa County, is senior citizens that are doing renovations on their home and those like that. We did a purchase with Shannon where she purchased a property. It was in Pensacola, but it was the thing that she purchased, and she was getting like credits from because she was going to rent it out to like low income housing.
Yep.
It was a quadplex, but it was like one main entry, but then it was like 4 separate units inside, and it qualified, I guess, for wherever, and she was able to get like government credits or something like that because she was gonna renovate or to rent to low income people, low income people. I think it was actually VLIP, so people like under 50% AMI. 120% AMI is pretty high, but yeah, I've seen incentives for people that are under the very low income, under 50% AMI, and that was one specific instance. So not only was she cash
credits from the county, right?
Yeah, not only was she cash flow, she was getting rent, but she was getting money from the government to rent to these people. So I mean, that's the only time I've ever seen that. I don't even know how she did it. I didn't really ask. I was just like, whatever, I'm doing the loan, cool. I didn't get into all those other things because that worked out with Escambia County. I think it was Pensacola. It was in Milton. Oh, Santa Rosa County, Milton. But yeah, I've seen that.
And the county messed up with splitting out the lots, so I had to fix it.
Any other questions? You can ask lending and title questions too.
Yeah.
Yeah, it has nothing to do with LLCs, but I have one rental property, short-term rental in Pensacola, in Escambia County, and I had no idea there was a tourist development tax. I didn't even know that existed. But here recently, I have no option to pay for it. I don't know if any of you guys have been dealing with tourist development tax stuff, but I did a little bit of research on it. It looks like there was like the Senate or something somebody was trying to maybe do away with the tourist development tax. I don't know if the law.
Yeah, it's on the revenue.
I did that in Alabama, and I was like 6 years behind in paying for my big rental house. And basically, I was going in front of the judge and negotiate with the lawyer, and I was on a payment program for like 2 years. And I would show up every 30 days, get the stamp that I paid the bill. So they're gonna get their money, and in this area, the rental income is huge. It's a huge tax base. They're not gonna get rid of it. If anything, try your best to figure out how you negotiate it and do a payment plan.
Yeah. Oh, no, I'm called up on it.
Percentage, maybe you can get it down, instead of paying 100% of the dollar, you might be able to get it down to 70 cents on the dollar or something.
I tried, they don't kick rocks. Yeah, they hit me with an $8,000 bill.
Yeah.
It just came out of nowhere, like they just started enforcing it, and like, I managed 30 short-term rentals, and we had, originally what had happened is if you're renting on Airbnb used to remit that tax for you. They silently just stopped.
Right.
And Escambia County was like, oh, we're gonna hit all of these guys. So they started looking at properties on Airbnb, like they are identifying them based on, they'll drive by and like, oh, that's the front of the house, that's the listing. And that's how they're identifying.
That's how I got found out that it existed.
Is that just Escambia County?
Here's your problem.
Santa Rosa County, and all the way, I can only tell you all the way to Bay County, Green Mango, whatever, that's as far as, it's a state tax, and then the county also has taxes on top of it, but the county is Florida. Yeah, it's rough.
Is that what they call the bed tax?
It's a bed tax.
Yeah.
Bed tax.
The problem is when you rent over, a certain threshold, they're still trying to hit you because your property is listed on Airbnb as well as a midterm rental. It's a long-term income now, so you gotta have good records on that.
a lot of the tenant law and everything, like renews every month versus, lease. That's all. Anything else?
On the lender side of like loan products and such, like for fix and flip and like DSCR loans, what are the best terms that you're seeing on your side with like saying like a 750 plus credit score?
So with a non-QM DSCR loan, we can incorporate prepayment penalties.
Yeah.
So if you want the best rate, you're gonna have to go like a 5-year prepay, and then so you're not obviously not a first-time investor, but I see this a lot. First-time investors don't know to look up tax bills and shit like that. So like, they find this property in Perdido Key that they think is a great short-term rental that's got an ADU, but it was somebody's homestead for the last 40 years, so her tax bill's like 15 cents and a couple raspberries, and just and then of course now that you're going to buy it, they have to use the tax estimator. So this woman was paying $300 a year in property tax because she had owned it for so long. You can only increase it so much. It showed assessed value as like $92,000, but somebody's buying it for like $350. Well, now their tax bill, they have to go to the tax estimator because it's going to be an investment property, short-term rental. So this is going to totally screw her PITI and her whole DSCR ratio because she thought she was going to have to pay taxes on $300 a year. No, she's paying $4,000 plus in taxes a year. Yeah. So yeah, a lot of people don't. And I tell investors I work with all the time, and I'm like, send me the properties that you're interested in, and I'll come up with, what I think an estimated monthly payment is. Obviously, I'll be able to build a tax bill. If not, I'll be able to at least use the tax estimator. The only outlier is insurance because, we won't really have a solid number until inspections are done, but I can still kind of get a generic quote to ballpark. But yeah, right now, if you were willing to do a 750 plus credit score with a 5-year prepay, and you have a better than a 1.25 to 1 ratio, you're easily in the 6s now for DSCR.
You see 100% financing for fix and flips? I know there's like a couple lenders that I know that are doing that for hard money.
For the rehab?
Yeah.
Yeah, 100% for the rehab.
Yeah.
But they'll do 20% down for Dustin. What were the terms that I had for you?
I think it was 10% down, 12% rate.
No, it was don't make me pull it out because I can have it on my phone.
I have it right here. I think it's because my credit score was low for me when I credit card on my first gestation period, whatever, before I did.
Gestation period, what?
Okay.
Before I could do a HELOC on property that I've been valued on. Seasoning period.
Oh, your seasoning period.
Oh,
that is awesome. That was awesome. Hold on. Let's see.
I don't know any. Just right. Kiabi was for a while, right? Justin doing 100 and 100.
Yeah, they still offer it, I guess. It's hard to search the groups. They still do it. I think the best we're at is 90-10. They knock it down to the point. Yeah, we set up on the road here. It's not bad. I think the last one we did, we were at 9.5%. So.
You're holding it 6 months.
Yeah.
Hopefully. You have a good railroad like me.
And we do good flips. So
10%. Okay, I knew it wasn't 12.
Yeah.
10%. Okay.
The dream team.
But how long was the gestation period?
Dream team.
You got mine?
Yes, if we could do anywhere from 92.5 to 82.5 loan to close with a 70 ARV, 100% financing on the, and then depending on your experience, if you're a seasoned flipper, I think it's 5 or more exits in 36 months. So I like using Easy Street and RBI are kind of the two I like going to, Lima One sometimes. RBI is a lot. They're easier with new fix and flippers, especially if it's a DIY thing. Some other ones will want actually a licensed contractor to do it. So obviously, if it's a DIY and it's your first one, there's more risk, so rates are going to be higher, terms are not going to be as favorable, things like that. But yeah, I mean, DSCRs, like I said, you know, right now, if you're willing to do the 5-year prepay, we're locking in the 6s, even like 3-year prepay. So I locked in a full doc, 3-year prepay, not DSCR, because it's for an LTR a couple days ago, and they were at 6.875 with a lender credit, and half a point was at 6.625. So yeah, as I said, our non-QM stuff, and I mean, it can't just be just us, because, but I think non-QM is becoming more favorable, and maybe it's because, you know, people know, or I think banks are gearing up for a rate drop, so they're kind of getting ahead of it, and they're like, hey, we'll offer you something tasty now, knowing we got you locked in for 3 to 5 years in that. That could be, you know, a very good possibility. I don't know, that's just speculation, but it just makes sense. So a prepayment penalty, you can only do them in non-QM loans. A prepayment penalty, so, and there's different types. You have fixed, you have declining, you have, I mean, it could be original principal, remaining principal. It just depends on how we structure it. So like if you want a better rate, you would go with a 5-year prepay fixed at 5% off the original principal. So that means anytime between when you buy it and that 5 years, if you refi or sell it or pay it off, you're getting hit with a 5% penalty on the original principal amount of that loan. Anything else? Questions?
Awesome. Thanks, guys.
Thanks, guys.
Hey, do you want to give out your phone number, your website, and stuff like that for the people?
Not really, because we got something to do tomorrow, and I don't want everybody to hit me up.
No, I'm talking about when it goes on the video. All right.
So, yeah, I'm a branch manager at Cross Country Mortgage. My branch is in Fort Walton. My cell is 850-733-6981. Email aj.dicarlo@ccm.com.
Jaime DiCarlo, branch manager, Southwick Title, Fort Walton Beach. My phone number is 850-480-3856. And it's Jaime.DiCarlo, DICARLO, @southwicktitle.com.
All right.
Cool. Thanks, guys. All right.
Thank you.
Thanks for coming.
Hang out.